Good day. This is the Eye of the Storm podcast with the weekly update for the S&P 500 being recorded on Saturday, July the 20th, 2024. I'm going to start here on the weekly chart for the SPX for the cash market. Excuse me. And I'm just going to do a quick review of where we are, and then as the larger picture continues to unfold. And again, for those that have not been following me or maybe new to this podcast, I am counting the SPX and the ES, the futures market, on an Elliott wave basis. And so I'm going to start from where we are right now, and that in October of 2022, we reached the low for a primary fourth degree. And that is part of a larger primary five-wave rally, which will then complete on its top side, would complete a cycle fourth wave. So without going into greater detail about that, sticking with that, we're in a primary fourth wave moving up. What that's going to consist of five waves of intermediate degree, and those are the ones that are labeled in the yellow, of which we have waves 1 and 2 complete, and we're still inside that intermediate third wave. So within intermediate wave 3, excuse me, what will that consist of? 5 waves of minor degree, labeled as such in this orange color as 1, 2, and we just completed minor wave 3. So what we have yet to do before we can complete that intermediate wave 3, we have a minor fourth wave correction, and then we have a minor fifth wave rally, and then that completes the intermediate third wave, of which we will then get an intermediate fourth wave decline, correction, and then an intermediate fifth wave, again to new all-time highs. So as it stands right now, this particular all-time high looks to have completed minor wave 3. So we get a minor 4 correction. We make up another new high in minor wave 5, come back down likely to the same area wherever we bottom within minor 4 to put in the intermediate 4 and go back up. So and ultimately over the next several months, and I would say between 3 and 6, maybe 4, 3 and 4 months in front of us, I am looking for 2 additional all-time highs here in the S&P. Now, so the minor would probably likely expected to make it up to, that's a pretty high number, would likely make it up to 6,000. And then the intermediate degree would likely make it up to about maybe 6,200. And or in that area. Of course, those numbers are just really very, very raw, they're not even strongly viable because we don't have many levels to base it on currently. I need this minor fourth wave to come in, then I can connect minor 1 to minor 4 and start getting some indications of where this could line up. As we start to come down, I'd be able to put in other fibs that are going to be able to signify where we can start to go within all of this upside. Because remember, anytime we go up and we hit a new all-time high, market's never been here before. So it's not like we have points in the darkness, so to speak, that going to signify, oh yeah, we should find resistance there, or we should find resistance there. Because you kind of have to come up and say, why? If the market's never been there, what point can we say is going to be resistance, and what point can we say is going to be support? We rely on the Fibonacci calculations, which are exactly that. They're percentages. They're calculations that we've been using over many years that do project once we start getting up into uncharted territory, so to speak, where we can get some idea of what levels can be reached here. And by the way, they're widely used. So there's a lot of algorithms that have already that programmed in, and you'll find that they'll buy and or sell to Fibonacci support or resistance. Now, doesn't mean that it won't break that level. We've seen that from 48.18 here in the SPX cash market, we've seen new high after new high after new high. So what we also build on is the wave pattern itself. If we're consistent, if we're looking for within this minor third wave, we were looking for 5 waves of minute degree. We basically got them, but through extensions, and both the third and the fifth wave extended within, and then the fifth extended a couple times within this final move up to finish this minor third wave. So I'm going to jump down off of this weekly chart. I'm going to bring it down. Let's take a look at the daily so we can start to see what's going on inside. So we can see here is the minute fourth wave. And so here's the finishing point. And that would have been, I believe that high is at 5669.67, and that was reached on July the 16th. And then from that, we've started down in the beginning stages of a minor fourth wave. So, but what am I looking for within minor wave 4? Well, going back to Elliott taught us or teaches us that the fourth wave corrections will normally find their terminus, their end point, within the price range of the fourth wave of one lesser degree. Well, if we're counting minor coming down, then the one lesser degree is minute. And here is that window, that range that the market can come down to. Now, the terminus is going to be 49.53, basis the cash. It's going to be different in the futures market. It's basis the cash market, 49.53. And the reason there's a difference, because within the futures market, because it is a future, it's like determining what price will be between now and September in the expiration, and there is interest. So when you buy that, you're buying on margin, you pay interest. So that's all calculated in over time. It's not like we're going to say, well, gee, you can buy the index at 55.05 for some point in the future. Well, that's a pretty good deal if you can do it, without paying any interest on it or any premium in that whole deal. It's the way that pricing works. So in other words, the futures market has premium within it, and that's due to the fact that it's out in the future. So, and right now, I believe between the future and the cash market is approximately 55.05, and that closed at 55, about 45 to 50 points, S&P points, sit between the difference between the S&P, the ES, which is the futures market, and the cash market. So dealing here in the cash, I'm looking for that decline to ultimately get back towards 49.53, and more so towards the low end of it rather than the high end of it. So what do we look for? We're looking for an ABC. Fourth wave should be ABC, and it'll be ABC of minute degree to finish the fourth wave of minor degree. All right, so now let's bring this down. I'm going to go right to that hourly chart, and we can see that I've marked it. Now, I'm not pleased with this, because it has to kind of come in as a diagonal, and it doesn't necessarily fit real cleanly even within that. So, but the fact that we're coming down pretty steeply now, and if we do break below the fourth wave of minuet degree, it pretty much should cement into place that this was the completion point for the minor third, and that we will continue down lower. And right now, my projections are that's pretty much what's going to happen. So I've gone ahead and marked this. Now, if by any chance, or for whatever the reason that may be, that does not break below 5,500 or 54.96 basis to cash, and we just start to rally from here and nonstop get back above 5,600, then we're looking at this being left as 3 waves down. And that would suggest that we go up and we make a new high. If that's the case, then we're definitely going to be looking for a move via the cash market to go above 5,700. Now, that is the alternate, and it's out there in the alternate, because right now the deck seems to be stacked that we should continue to see the market correct. Just correct, folks. Now, you need to understand the correction versus a strong decline for reason, like there's a war, or there's a financial collapse, or there was a pandemic, or et cetera, the different reasons that could absolutely upend an economy, upend any broader terms of why the market should rally. There are things that can happen in the world and things that can happen beyond the control of any of us that will do that, i.e. the pandemic, i.e. the 2008, 2009 financial collapse, which was triggered by bad mortgages placed throughout our country that just turned into one big disaster. And so as it just begins to unfold and we started to realize the depth of it, then we just started to see a total just meltdown of everything because of its widespread effect that it had on everything. So just as we saw when the markets topped in 2022 and interest rates, it was obvious that interest rates were going to need to kind of to start to go up rather than down, and that threw the market into a pretty strong decline, which actually just put in the primary fourth wave. Initially, I thought it was going to be that I thought that the cycle 4 completed in 2022, and that what we had come down into October of 2022 was primary wave A, and that what we were finishing way before we got up to this high would have been primary wave B, and then we would be coming down at primary C wave. Well, it started to break levels that it shouldn't have, i.e. that this wave got to be greater than 1.382 above the all-time high at that time, which was at 48.18. Once we saw that, then we had to shift that over to the alternate, which was that it was a primary fourth wave. That's where we're at. So within this, we're going to continue to see this minor fourth wave put in its correction. Now, what we're counting on, see, we're counting right here, we'd be looking for a minute A wave. What's going to be inside that minute A wave? Well, for me right now, it's going to be 5 waves of minuet degree, of which we've likely completed 1, 2, 3, 4, and we got the 5th wave coming in. Now, could the 5th wave be complete at the 19th on those lows, yesterday's lows at 54.97? It could, but I just don't think that it is totally complete. Otherwise, I think that rally would have pushed this further back above 5,500 and getting back up close to 5,550. So, but what it did do, it did hold 5,500. Now that remains important, and it's going to be interesting to see where actually this put wall has now been placed. Is it remaining at 5,500? Because I think if they start to break through it, we may see a lot of adjusting coming on if the put wall remains at 5,500. That still then would be major support, and that's up here. A break could throw it very quickly down to 54.72 or even as low as 54.20. So that's why I've left those markers in. We could have a humdinger of a small 5th wave before we would begin to rally again. And that could happen simply because of the order flow and the adjustments that are going to be needed if we break solidly below 5,500. So right now, I'm looking, we might go down and retest, maybe break a little bit, but it should hold, and then we should see a strong rally. So that's the other side of this. I think once we can get this 5th wave in, it should rally. So if they go down and they actually do break it and start to adjust, and then somebody comes in and starts to buy it and say no, well, then we're looking for that to rally pretty quickly back above 5,500, and then we'll be able to actually put the minute wave A, and we're looking for a minute B wave, and then we'll be taking fibs from wherever this high down to wherever this bottoms, and then we'll get our B wave. Most of the time, B waves, you're going to look at a 50 to 62% retracement back up. So again, it could begin to feel like if we get that extra low and I can get the 5 in, and it's going to feel like, oh boy, we're just going to go, we're just making new highs now. And that, I believe, is what it could feel like. Like all of this for naught, don't you worry, don't worry, where everything is just absolutely cool Everything's fine, blah, blah, blah. And then something else will likely happen, and then it'll just change it, and then we'll get a C wave, and then it'll take us down to that other level. So right now, I am looking for the minuet fifth wave to be complete. And again, if this is only one and this is two, we might get a stronger break. And it just takes it right down through, and we end up down here before we see that strength of a rally. These are all possibilities, right? Because this doesn't look like it's like a 1, 2, 3, and this is a 4, because look at it, kind of comes up, equals the 1, not quite, but I mean, if anything, I got a 1, maybe a little 2, 3, a larger 4. So it doesn't quite fit as much as it does 1, 2. So 1 of 5, 2 of 5. Get out of the way of 3 of 5, 4 of 5, 5 of 5. And that we do come down. And I do think that then the put wall gets broken. And then everybody deals with it. But then again, I'm not really sure how much actually came off because of the expiration on Friday. So, there were a lot of expired within the SPX as well. So again, I would check in probably on Monday when I get a new set of data from spot gamma. That spot gamma tells us, where put walls and call walls travel to. Plus, there's other larger gamma levels that they do adjust. We had an expiration, so a lot of things come off, and a lot of things either got rolled or they're just gone. It just they've settled, and now we're moving on to the next leg. So those, I think, can happen. We get a stronger decline, and again, this is the cash market, so it may start tomorrow in the opening of Globex, but I think it would continue on Monday for the cash. So what we could see in Globex in the futures market is a quick decline, and then they rally it back up. And then, so the market may reach a 5 on the basis of the futures market, and then rally as if it's starting already into the B wave. So that would then, depending on what the cash actually does, if the cash just kind of gaps up because due to what's happening overnight, well, then I would have to put the 5 here, as much as I don't necessarily want to, and I'm including it. But if that doesn't happen, then I would think we're going to get some follow through to the downside come Monday morning. So again, this is the cash, so it has to become Monday morning. That when the cash opens up, if it just gaps down and then rallies, it all works. We just need to see those lower levels so we can put our markers in and begin to put our fibs in for what we think for wave B. All right, so over in, let me just go up to the daily. Let's take a look at the moving averages, see what they look like. You can see that we still got the 50 down here at 54.07. So we could, here again, the 20 has been broken, but it's going flat versus really starting to decline. And even though it got broken here and then again here, it's still not really reacting in any strong way to the downside. This is the daily to the downside. So I'd like to see that come over. And when it comes down, it may hold the 50 to finish the first 5 down and set us up for the B wave. And then it would be in the C wave that I'd be looking for it to break that and get us down into the other levels that we're looking for that minor 4. Okay, over in the ES, our friend the futures. Again, just moving out, taking a look at the 3-year weekly chart, same deal. Got a lot more fibs going, but same deal. So we have, there's the 4, 1, 2, 1, 2, 1, 2, 3, 4, 5, completing that minor third. So I'm going to come right out of this, and let me just kind of say, I need to clean this one up. Let me just start cleaning these up. I'm sorry, I thought I did this already. And so I apologize. 2, 3, 6, 3, 8, 2, 5. I think we need those. And we're going to mark these in the correct color. So, because what we're looking for here is, you can see, and this one I don't think is valuable anymore, because that is showing an upside. That gets rid of that. And this is actually showing an upside way up there. But I'll leave that because that's showing for intermediate wave 3. You're going to see it's all the way up here. So intermediate wave 3 is like 6,200. And then intermediate wave 5, maybe up to there. So that's where I got the 62 level from on the intermediate degree. So now let's bring it down out of the sky. And one more time, there is our box. So let's go take a look. Bringing it down to the daily chart. And so we can see that we have minute wave 3 and 4, and then minute wave 5. And then we have, which will consist of 5 waves of minuet. So we have 1, 2, 3, 4, and the minuet 5. Had a nice extension here on the 3rd. We had, it broke down to its own 3 basically within, its own 5 within minuet wave 5. So pretty much it all just did pretty much what was expected, except it did extend inside these particular waves. Not that it broke any patterns, or even the extensions were within reason, so to speak, but we extended higher and then extended higher. And so we got up pretty high. In fact, this high was 57.21 in the futures market. Now, coming back down off the daily, let's go down to that hourly chart, because we want to take a peek inside here. And what we got going on is that 5th wave all the way up to the minor 3rd. So again, what we're looking for on the futures basis is we're looking for a move down to here. Now, this is basis the September contract. That low is 50.27, 50.28. That's basis the September contract. Well, if we're going to move and we're going to continue flowing lower as we start to get closer, well, then what are we looking at? We're looking at let's see what's on board. So there we go. So we go from September to December. So that's the cycle. So it's March, June, September, December. That's the cycle that this futures market kind of goes within. So we're not going to get an October future. We're not going to get a November future. We get a December future. So once the September is gone, then we're going to be dealing with December. And so back to my chart, we're going to be dependent on what that level was basis the December contract. If this decline moves out past September. So in other words, I'm kind of thinking, well, we stand a chance we might be able to get down there because it could be a really quick drop. And then we pick up the rally again in a minor 5th wave. So remember, we got the minor 3rd complete, the minor 4 coming down. Then we have a minor 5th back up to new all-time highs. That'll complete an intermediate 3rd. Then we come back down in an intermediate 4th wave. And then once that's complete, which I'd be looking for again, if the minor 4 finishes up down in here somewhere, maybe a little bit lower, then I'm going to be looking for that intermediate 4 to come down to that same area. So we've got 2 lows coming in basically close to one another. And then we have 2 rallies which should exceed, the intermediate high should exceed by a fair amount, not huge, but by a fair amount over the minor 5th wave. So bigger degree, we're looking for a little bit more. Right now, I'm going to bring this down back to that hourly chart, and we're going to look and see where do we stand in all of this. So there's the 3. Here are just the fibs. Those are the larger fibs for the minor 3. And then we have coming off into here. So these actually, let me just go back out to find out what I did here. So I've got actually fibs inside that I use, not necessarily, again, I discussed this in my daily updates. These fibs go along with this minute 5th wave. So what we're really looking at here is to what fibs within this rally coming back off will be effective. And again, not that they are Elliott fibs, they're just straight fibs for retracement. Because I'll tell you, algorithms are programmed with these levels in mind. If we're declining and we find support at 55, 57, then we're going to bounce because that's a marker. The next would be, down here at 54.50. That's a marker, and likely is going to be support, bigger support, just for a move. So it's fib, but it's also because it's 54.50. So it'll provide support. So on and so forth all the way down. Now these outside, those are for the minor fourth wave. And we can see that coming in between 0.236 and 382 sits our box that we're looking for that minor fourth wave to come into. And if we get down towards the bottom, then we're looking at 50.27, but we have right below it 5,000. So that all works. And that 5,000, by the way, likely is going to match up pretty quickly to the cash market at 49.53. So whether it's a September contract or whether it's a December contract, I'm sure that those numbers will kind of match up with this one and the cash, with the cash market down at 49.53. That's the low of that wave 4, the minute wave 4 in the cash. So again, we start to see how things can line up price-wise, and so we start to kind of look for market to come down there. These I will take off once we start to complete and we move past that. Then I'm going to be more concerned with these, and we'll have some internals this way. Coming back down again, let me go back to that hourly chart. Here we are inside this thing. Now, what am I working on? Well, we had that one coming up that if the market did stop here, then it's likely going to be left as a 3, an A, B, and a C for 3 waves down. And we've got that where we come back up and likely towards that 57.50 area, maybe a little higher. I'm not necessarily looking for that. I do think that we're down, we're moving strongly into that corrective phase. And there may be some that think, okay, that's enough and now we need to rally, but that's, individually. But let's bear in mind, if I'm looking for 5 waves down again, there'll be a minute degree A, B, C to comprise the minor fourth. So I'm counting a minuet 5 waves down to give me confirmation that the correction is underway, but also to start to tell us that it's likely going to be an A, B, C, and it'll be a zigzag, which I would expect at this degree that should fit in pretty cleanly. So the A wave will be 1, 2, 3, 4, 5. And then I would put a minute degree A here, and we'll look for that B wave. Within it, what we've got so far is 1, 2, 3, 4. Now, I've connected the fibs, but what can we look at? Like down here, we can see we've just crossed over. We're over that 0.236 at 55.57, kind of went down, came back and got it, now closed below it, because the more important support is at 55.50. It wrestled with that, dropping below it, which would really, if it did, it would shove the futures market to next support, which is at 5,500. So again, we got those 2 important levels that the market needs to deal with. It went through, but it gained it back and closed just below that just above 55.50 basis the futures market. So we'll see what they want to do come Monday, because here again, I can't really peg this as complete just yet. I can bring this all the way down and take a look at it on the 15-minute chart. Now we're going to take a look right there. So we have 1, 2, 3, 4. We could, but then look what it did. Did 3 up. So 1, 2, 3, 4, 1, 2, and then we got a little bit coming off here. And so we should, again, just based on what I'm seeing, likely have a lower opening. Basis the future, that could come tomorrow afternoon. when they restart Globex. We need to come down. So what is our first marker? 55.15. That's where wave 5 would be equal to wave 1. 55.15. I've already marked it out right now. Wave 3 is the longest. So we don't have a threat that if this comes in above 55.15, that puts wave 3 in jeopardy of being the shortest. It would not. Which technically wave 1 would then likely turn to be the shortest wave. What do we have below that? Should this really start to drop quickly? Well, we have 55.15 and 54.59. But again, what could trigger that? That important break of 5,500. That's been major, quote unquote, long-term support for the S&P 500. If they start to break it, boom, a lot of adjusting, a lot of like, oh my God, something bigger's happening, and we could just see some fallout, and it could drive the market down another 50 points to 54.59 too, and then we have 382, which is just support for the whole minuet wave 5. And so that comes in at 54.56. We got about 3-point range there. And then continuation brings us down further. So we start to get a little bit into a black hole because of the way the market rallied. The way the market rallied. So there is not many points that we can hang our hat on. We have one here, and that's just right at 5,500. And that's that low for that wave 4. We start to break that, it's going to give confirmation or stronger confirmation. The minor 3 is in, it's done. And we're going to go down before we go up before we break to new highs. I think, yes, we will do that because, again, it's just a minor 4. So we have a minor 5 up to do. That's still out there in the future somewhere. Let's get through this first. So I think that we're well on the way. It is progressing. The rallies, as long as they continue to fit within a pattern, like this 4th wave right there, that it really was not the easiest because we kind of come down in a 3, and then we had an A, we had a B, which would basically just put in a slight new low, and then we had the C wave, which did not quite take out that high, but it's still a flat. It's still an ABC flat. And you put a 4 on it, and then we get the rest. And as long as the market continues to react as it should, we got the flat, the nature, the whole thing, that all fit, and then we got started with 5 down again. So it all works and fits very cleanly. Now, again, I think, yep, I can go from there and say we had 1, 2, 3, 4, 5, but gee, maybe it's just 1 of 5. 2 of 5, and we really are going to slide come tomorrow. We're going to slide come Monday to finish this initial wave down. So it depends. It's how people came out of expiration, whether they're really going to go into a little bit of panic and they don't want to see this, or the S&P just really starts to break support that needs to hold. That can happen as well. Let's go back out to the daily. We can take a peek at the moving averages. We can see here the 20 was broken. You got that acceleration, which we anticipate and look for. Next up is the 50, which is at 54.80. Now that can be tested. That can really be tested. And if it gets close and holds, then we're going to see the 50 go flat, and it'll provide some more decent support. Right below it, we again continue to have a 54.60 down to 54.55. We have additional support. So we have a decent support area that could complete this minuet wave 5, and that minute wave A gets put in there. And then we'd be looking for a B wave back up, and likely could take us back up towards the 5,600 area. And a B wave, and then we come down in that C and finish this whole thing up. Now, C waves are usually going to be the stronger between A and C. C will be the stronger decline. And again, your guess is as good as mine as what's going to really lie underneath it. Don't forget, we're moving into the larger section of when our Mag 7 starts to report, when a lot of the other larger tech companies also begin to report their earnings, and maybe that'll be the driving force. Can't say. So there's a lot of stuff happening in between. All right, so The outlook, I'm looking for a completion of the minute wave A of minor wave 4, and then we get a decent rally, but I think we need to come down and finish that first. And it could be a stronger slide still before we start to get that little bit of an upside move going. All right, that's going to be it for this update. The next Elliott Wave Daily update will be on Monday, July the 22nd.